Hey guys, Glacier Path Trading here. Wanted to do another GameStop video. I believe I'm going to be doing a video every Friday night, as often as I can, just to kind of go over updates. But I want to have this video as sort of an addition to the video that I posted about how my overall theory and how GameStop short algorithms are trading basically in a channel from the swap top of the original retracement from the swap low or the squeeze low floor. And just to put it very simply, this move here, the squeeze move, the retracement, and then the pop sets the range, and then you get algorithms short trading all the way back down to the floor. Okay, that's my overall theory, and but we'll talk about some things, and we'll also talk about how that theory can be invalidated going forward in this current cycle. But I just want to point this out, okay? We have the squeeze move in January. They shut off the buy button. It retraces. Let's go ahead and pull this live. It retraces 92%. 92%. So let's have that and remember that. And then it basically almost does a 786 Fibonacci. From that point, I want you to see this for yourself. Literally, I'm going to mark this by an X. Every previous high does not break and hold. Does not break and hold. Okay? So failed here, another run failed, previous high, another run failed, previous high, another failure, another failure, another failure, and the final failure into $10 right there. So every time this stock went on a run from the bottom channel, you got people screaming that it's going to be the MOAS. This is it. This is the final reversal. Here we go. And every time it has failed in the channel. All the way up into the point where 3% from the squeeze low floor, you hit the bottom. Would that it actually be 4%? Let me check. Let's check here. So it is a very thin margin. 32 cents, 3.35%, okay? For 3 years, everybody was saying squeeze, 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 this is it, this is it, this is it, and it went to $10. And by the way, Ryan Cohen bought the stock at $21 to $23 in that time frame. So it dropped 50% below his cost basis. Now keep in mind he had a cost basis way below that down here as well. So again, not a huge deal that CEO insiders are very confident in this and they're going to hold even into losses. Okay, so let's just keep this in mind. Now, because we get to the squeeze low floor, GameStop's macro is in a reaccumulation. What that means that it cannot break and will not break the squeeze low floor from the original move. So the algos drive it up. Roaring Kitty sees that deep value there. And whatever reason you want to apply to that doesn't matter. We get a markup in price. And now we're sort of in this sideways channel, potentially a downward channel, as I previously discussed. And now we have an interesting moment where potentially you have a series of higher lows, and that's how all of the squeezes start out. But keep in mind, that's how all of the next micro distributions start out as well. So it is an inflection point. Now, there has only actually ever been two markups in GameStop's history. The one in the long, drawn out one from 2020 and the markup here on 2024. Okay? So everything else has just been noise. It's been chopping lower highs. So let's just confirm for ourselves visually that it is indeed lower highs on the chart. So we have obviously the swap top. We're not going to count that because that's the top. So we drop down, we do congestion. So here it is. Didn't get up to the swap top high, so that's a failure. Drops down, pumps again, did not hold. It did break temporarily, but it went right back down, so that's a failure. Remember, break and hold. Failure. And this one we don't know yet, right? So, but I want to point something out, and this goes back to my video. And this is not an overcomplication. This is an oversimplification. The squeeze low candle is at 1770. We hit a low that is literally 12% from that price, $2.20. I personally do not think the short algorithm is done with this. I think we are going to drop to $18. Okay. How that looks like, I don't know. I just have a bar pattern just to kind of show it in yellow. Now, if this is another failure to break the previous high and maybe we pump to $26. Hey, maybe we even go to 27, 28, $29, but it drops quickly. The point is to break and hold. So let's say it fails there. Well, then obviously your parallel channel, I'm just going to draw it, was something like this. Right? So very similar to this. Okay, so obviously that's what it would be. Now let's clean this up a bit. Okay, let's just say for a moment that this is the start of a markup. Then we do have the signature M base, which means a low and then a higher low and then the fast attack upward. This is seen in every markup, the last two markups. In May, and I'm going to pull up the 4-hour chart. There it is right there. There's the M. Okay? First peak, second peak, higher low. So higher lows, and then the big shoot up move, consolidate, squeeze. Okay, so let's check that theory on the 2020 beginning. There it is right there. There's the M, the fast attack up. Higher lows. Okay? So obviously we're at $20 now. It's a lot different environment than being at $1, and it's going to be less volatile, right? So the question is, though, number one, we have to ask, is this a true break of trend on the macro? The answer right now is no, but that will change if it breaks this high right here. So $28 basically, right? If you break $28 and you hold that mark and you continue to push up, you are marking up, period. All right? So there's either this particular case, which mimics the fast attack of May, right? Or you follow the 2020 path here, and you're kind of doing more of a choppy move, sort of a more of a parabolic clean arc here into where you get resistance, and then you have some type of event, maybe news. And I want to point out that's around April 20th, that's around May. Again, May being a common season, a common month that we've seen a lot of push up in the stock. And then you might be looking at June, you're up in the 40, 50s. And if it's previous May squeeze, you could be up close to $200, $100. This is all subjective, and this is all just sort of speculation here. But I want to point out we do, and this is the reason why people get so excited, is because you have a push up, a retracement, and then a higher low. That's exactly how every move basically goes. You got the push up, retrace, higher low right here. People were saying we were going to squeeze, and then what happened? We distributed micro, and now it's the exact same pattern. Okay, this exact same pattern right here. Boom, boom, right? Boom, boom, and that is how they trap retail. That's how they get liquidity, and that's how they distribute on the micro. Now, if it is I'm going to remove this. If it is one of these paths and we are indeed in a markup, like many of you say, and attack me for, I guess, which I don't really understand because if we do go to $18, it's a better opportunity to buy the stock. I personally wanted to just invalidate this whole theory and let's just go because I have shorter dated calls into late March with full disclosure, and I have longer dated puts into April and May, just to protect that downside risk. And more capital is on the short side, obviously, in that particular trade. But I would be just as happy if this shot up right up to the high 30s, right? But if it does do that and we are in a markup, then it wasn't the downward channel, right? It is a flat channel, okay? Because then you would push up, consolidate above the channel, and then you would squeeze on both of them, right? Because this one you would push up to the top of the channel, and then you would just get a gap up, and you would retest the top of the channel and go. And if you study Wyckoff, you know that's the retest of the channel and sign of strength, etc. Regardless of how you want to name it or study it, it's very common. You break, you mark up, you retest the channel, and then you do your squeeze move. Or I'm sorry, you break the channel, you retest, and then you mark up. But first things first, guys, you have to break $28, and you have to do it with some significant volume, in my opinion, and you have to hold the trend. So if we start seeing, like, let's just say over the weekend we go to war with Iran, right? And the market's super weak and it dumps, and you start seeing this, you know, maybe you get a pop like that, and maybe you start coming down. You know, we're going to $18. We're going to $18. However it happens, we're going to $18 because then that would confirm the theory that this is not a flat channel and this was not a spring. Um, Let me get everything back. Okay. It was the descending channel, just like 2021 to 2024. And where the heck is it? I always lose track of where my tools are. Okay. And the channel was like that, and then you get to your just above the squeeze low floor, and then it marks up. So for timing wise, I'm not going to speculate on that. I would just wait on the target prices. But the reality is this: when we squeeze, we set a ceiling and we set a floor, and we chop in between that. And I just do not think, from a historical perspective, you have lower highs, lower high, lower high, lower high, lower high. This is a downtrend. This is a downtrend. And so if this were to break trend right here, we have to break the previous high of 28. We have to hold, and we should do it with volume, and we should probably break the channel of 34, 36. Technically, it really would be $35. And the only way we do that is with significant volume. And we should see a straight up move, period, because that's how every markup has happened for almost all of the meme stocks. It's the base M with a straight up bull flag, basically, right? Okay, so am I opposed to seeing a markup from this structure? Of course not. I want to see that. But history has shown, and my overall theory is that these short algorithms, when they get to areas of low liquidity, implied volatility starts drying up, and you get some natural price action. And then you have the CEO coming out and hyping up the stock, and Michael Burry coming out. And I want to also say this is, I mean, from the low, what are we up, like 20, 30%? I mean, the high hit 30% from the low. That's not that much. I mean, we've had bigger runs in the past without the CEO, without Burry, hyping up the stock. So, next week, could we just immediately go straight up, break 28 with volume, go to 30, 31, 32? Yeah, we could. And that would confirm it for me. We're marking up, right? But I just have a feeling based on how this is really not that strong of a move, at least yet. It reminds me of this. It reminds me of this. I mean, I'm not gonna say that the fractal is identical or that's how it's gonna play out, but if you literally take a one for one here, right? You get to the target, you get to $18, and it's that easy. It's that easy. It's $18 from here is not that big of a deal in my opinion. It's about 30% or so. Okay, sometimes we see that one day with a stock. I mean, look at Unity when it dropped, right? It was down 20, 30% in a couple days. So basically, what I would say is that after GameStop earnings, it's a potential that you get into your low, and maybe then you get your announcement, and then you have your squeeze move, or we're just going to continue to make higher lows, and we're going to go into the markup, but you got to break 28. So I don't really have anything else to say about that. Um, it's it's not about who's right and who's wrong. I know that's literally the obsession with some of the people in this community. Um, Literally obsessed with people giving them admiration and telling them they're the best and shitting on other people constantly. And yeah, I'm just not going to do that. So I would just be cautious here. I would be cautious and I would be patient and I would watch. And however you want to trade this, you can trade it however you want. But we do have the beginnings of a classic markup. However, that's how a lot of the ultimately the lower high stabs have played out with two significant higher lows, and then you get another move, and then it fails, right? Because that's typically what a bear flag will do, and we just got to see how it plays out. So I'm hoping it squeezes, but my gut is saying we have some work to do to the downside to complete this overall theory here of ending up at the squeeze low floors. And then we would have a markup, and then we would restart the process all over again, but at a higher price point and significant more momentum and interest in the stock, especially after an acquisition. Trying to do the swap with higher interest rates is going to be more difficult, and there's just a lot more to that. And I do think time and pressure is winning out here because the times in between these, from the top of the swap top to the squeeze floor, we're coming up to 2 years now, which previously was 3 years. So, potentially the next cycle could only be about 10 to 12 months before we have another markup again. So that's something to consider. And hope you enjoyed this video, but we really got to keep it simple because every time you look on X, you're going to see somebody explain how this particular run or uptrend in a downtrend is going to result in the markup. But if you really, really want to have a fail-safe process, you have to break $28 and you have to hold that for at least a week or two. And then you'll see the straight up move. Or we just get the straight up move right away to like $40 right here, mimicking the May run. And you're done. You know it's going to happen. So, all right, guys, take care.